Hello everyone, welcome back to the Road to Retiring channel. Today I wanted to have a little estimation of the Broadcom fair value. So if we have a look at it, I wanted to get this out because there is this upcoming event tonight for the earnings report, and I want to see how this will potentially impact the value, and I want to have a log of what my expectations were before that I can look back on and see how things have potentially changed. You do enjoy sort of content like this where we go over fair values for stocks, leave a comment on any other stocks that you are interested in me looking at, and subscribe and like, and that lets me know that you're interested in it. So going into Broadcom, you can see the general trend of the stock, this is going all the way back to 2010, is very good. It's consistently grown in price pretty much year on year, obviously moving with the market a bit during certain crashes and certain booms, but typically a very nice uptrend since 2010. Price has been moving in the right direction. So I wanted to go into my valuation for it a bit first. So we look at the metric meters sheet here. You can see it's had fantastic growth across all four of the metrics I like to look at to see that a company has a solid moat and is able to maintain its competitive advantages. The average growth rate across equity, EPS, operational cash flow and revenue is coming to 25.66%. So that is really impressive. And I'm not in any worry that they'll be in any imminent financial trouble because they are able to pay off their long-term debt with their free cash flow within 3 years. So because of this, I'm not super worried about their long-term debt getting out of hand and any issues arising from that. But I would like to see the management investing funds a bit more efficiently. Right now, the return on invested capital is really good, and if it stays at these levels, I would be comfortable. But if I show you historically, it's not been the most impressive. We go to annual here, you can see in 2016 it was actually minus 8%. This rose all the way to 30% in 2018, but then it was back into single digits across 2019 and 2020, and rising again to 18 now. As I say, if it keeps these levels at 18, I will be very comfortable in reducing my margin of safety when I am analysing this stock. But right now, I think the average still falls under that 10% benchmark I like to look for, and I'm not super confident that it's going to be able to maintain these levels as it hit high levels in the past and fell back down. So because of this, we are going to increase our margin of safety to 15% from the usual 10%, because we're not super confident in the return on invested capital. But going over to the values here, as you can see, the yellow highlighted boxes are the ones that we're going to change, which will change our value and what we think. It's currently got a dividend yield of 3.1%. I'm comfortable leaving it around that value. As you can see, it was only 1% in 2016, but moving forward, this rose to 3.17 in 2018 here, and it's pretty consistently been around just over that 3% level since 2018. So I'm comfortable leaving it at the current 3.1% that it sits at. And they have a sort of great history of increasing this dividend. If you look here, it's 4.6 currently, and each quarter, and you can see how this is just going up each year in the graph here. So I'm pretty confident that they are going to keep increasing this dividend as the stock price hopefully continues to increase. But moving to the sort of discount rate, we're going to put this to 6.4%. Usually we like 9.5%, but as this does have a dividend yield of 3.1, this is going to reduce our discount rate to 6.4. And as I mentioned earlier, 15% margin of safety, and we are going to have 1% share dilution. They have been releasing more shares and they're sort of buying back. You look in 2016, there was 398 million, and this has rose very slowly, but it has been rising to 418 million now. So I've just incorporated a 1% share dilution into our estimates. So in terms of predicting the 2028 value using the price over earnings, we've gone for 5.7% in earnings growth rate. This is from the current EPS estimate of $40.66 per share, and we've gone with a PE multiple of 16. Now their PE multiple, you can see, is quite different if you look at the non-GAAP versus the GAAP, but I feel comfortable around those levels of 16. The sector median is 18 in the PE non-GAAP, and Broadcom typically 5-year average is traded at 15.86. So this is somewhere I feel comfortable. This is pretty much in line with averages and as low as it goes. So I'm comfortable with that, and if we show the price over earnings ratio, if we ignore this one massive boom in 2018, which is sort of displaying the graph weirdly, you can see it did rise really high to 55, but it's now back down to those levels around 22, 17. I feel comfortable at 16. This is where I'm confident that they'll be able to achieve these. I don't want to overestimate what they can achieve and then buy in too high. And that gives us a fair value in that gives us a 2028 prediction of $816, which you can see here. And that means our fair value for Broadcom for the price over earnings comes to $508. Now, this is obviously a bit below the current price, but this still returns quite a decent amount, and so it's not something that I'm looking to sell. I will just look to hold for now and potentially buy some more if we do see it drop down to the levels around that $508 mark. In terms of price over sales, here we've gone for 4% revenue growth. You can have a look at the graph here. There's really not much revenue growth expected, moving from 35 billion to 38 billion in 2025. These aren't the most impressive growth rates, and it's only at 4%, moving us from these values here, 35 billion to 38 billion in 2025. And we've gone for quite a high price over sales multiple, although their price over sales multiple is climbing pretty consistently. As you can see, here it is from 2010, very consistently just on an uptrend, so it seems like it is going to head towards those levels. I wouldn't feel comfortable much lower than 8, which is around where it's trading now. You can see it's at 7.63. With those estimates in, that gives us a fair value with the price of a sales multiple of $481 with a 2028 price of $771. Remember, this isn't including dividends as well, so there is that extra price on top that you need to think about. And in terms of price over operating cash flow, well, this isn't super great. If we look 8% operating cash flow growth, that's just a little bit above earnings, where we sort of like to keep things in line. An estimate of 16,736, that's going to be in millions for 2023. And if we look at the operating cash flow here, 16,740 or 16.74. So that's where we are in terms of operating cash flow. And the multiple for this, we've gone for 15 again. Sector median theirs is sitting around this 15 level, but the sector median is higher. It's like 19.68 or 17.37. But 5-year average, they've only traded at 13.5, 13.6. So they typically are trading below that sector median on average. And so I wouldn't be super comfortable lifting it to that sector median level when they haven't shown a consistent ability to perform at that level. But I've gone for 15. This is pretty much in line with where the price over cash flow sits now. And yeah, that brings our operating cash flow fair value $444 right now, and the 2028 price sitting at $713.43 based on that. Now if we take the averages of all of these, that's a $767 2028 price prediction, which is a 5.26% return. And then when you include the dividends on top of that received, that will be an 8.37% compound annual growth rate. So it's not terrible right now at all, but we just like to see slightly better value if we were to buy again, and I think we'd be looking a lot closer towards this average fair value of 478, maybe around the 500 mark we start to become interested, because it's a great company in terms of the metrics, and so it's something we would look to maybe get into at an earlier stage than when it drops all the way down to the buy value, but definitely we'd want it to be a bit closer before we re-engage. Let me know if you would change any of these values, or if you're interested in the way I valued these, and if you do want access to this ultimate stock valuation spreadsheet and all of my buy values, there's a link to the Patreon in the description, and where you can access all of that. So we'll have a look again at this post earnings, potentially if much changes, and if the analysts are then expecting a much higher return compared to what's expected here, or if they're expecting lower and we might have to sell. But we will revisit this if there are any major changes. But this has been Road to Retiring, and I'll speak to you in the next one.